Hello traders, in our last video we looked at the Forex trading psychology, during which we outlined the significance of understanding a trader's money mindset when trading. In today's video, we will enlighten you on the impact of a trader's emotions in Forex trading and also how to master the emotions for effective trading. Kindly remember to subscribe. So let's look at this chart of Euro USD. Assume that there is a trader deciding to take a buy position during the early trading hours of London session. So they took a buy position in euro, and one thing we see is that immediately they took their position and it turned positive for quite a while before turning negative, or rather turning into losses for the next about 1.5 hours, and then resuming in the direction that they had speculated and hitting the take profit if they remained in the trend, that is in the latter hours of the day. One thing we see is that probably this trader became excited when they took the position and turned profitable immediately, however, for small, for a few pips. But then they suddenly became sad when the market turned against them, and probably they were wondering whether there is someone who is watching their trend to take a position against them immediately they have entered the market, which was not the case. But then probably they continued to exit the market with a few pips of loss before the market resumed in the direction that they had speculated and continued till it reached the level that they had estimated to exit at. One thing that probably might have happened is that when the market continued in the direction that they had speculated, without their involvement, they even became more disappointed with the market and probably termed the day a bad trading day. As we have seen, there are various emotions that are involved when a trader is trading, and that can determine how one performs in Forex market, with fear and greed being the most common culprits. Fear can hinder a trader and prevent them from seizing profitable opportunities due to the fear of losing money, while greed can lead to impulsive and risky decisions driven by the desire for maximum profits. To thrive as a trader, mastering your emotions is essential. Here, or as you can see on this image or on this chart, we have listed some of the strategies that traders or professional traders utilize to navigate the psychological challenges of trading. The first is develop a trading plan, or rather, what you do as a trader is you ensure to create a trading plan. This is compared to a roadmap that guides the way you arrive at decisions when trading. The plan should encompass trading goals, risk tolerance, entry and exit strategies, and money management rules. Having a well-defined plan helps to reduce emotional decision-making when trading. So, the next strategy that you can use to counter or to master your trading psychology is controlling your emotions. Recognize and control emotions during trading. Usually, professional traders often take breaks from trading and assess their emotional state so as to regain focus when trading. That is, probably at that time that we have seen a trader was at a trend that was turning to a loss, they can decide to step back from the computer or from the charts and then focus, or during which they'll be able to focus on their trading or their trading plan. The The next strategy is to practice discipline and patience. Discipline and patience are qualities that every trader should exercise as a means of overcoming emotions when trading. You should ensure to stick to your training plan, avoiding impulsive decisions when trends go in your favor or against you. Forex trading often negotiates waiting for the right moments to enter or exit trends. For example, we have seen that traded clearly marked support and resistance levels, and they took their position at a good support level, but the market afterwards turned against them for a few pips before turning in their direction. What you are saying is that just like that trader and the places or the areas they had planned they will take their position at and exit at, every trader should have areas or wait for that moment that those areas can be reached so that they can enter or take their position and exit at the levels that they have estimated that they should exit their trades at. The next way to master your trading emotions or your emotions during trading is risk management or appropriate risk management. Set realistic stop loss and take profit levels for each trade you take. At no time should you risk more than you can afford to lose in any trade that you take. Again, you should ensure that when you are taking any trade, you have stop loss in place and take profit in place. At the same time, you must ensure that you have managed your risk appropriately and not taking trades with lot sizes that are likely to consume a huge part of your capital. The next thing that you should do to master emotions is to learn from your mistake. Learn from your trading mistakes. Mistakes are part of the trading, but successful traders learn from them, and by analyzing the past trends, identify patterns or errors, and use this knowledge to refine your strategies and avoid repeating such blunders. Finally, seek support from traders. As a trader, it is important to join a community of like-minded traders for insights and support. Engage with experienced traders, share experiences, and learn from their successes and failures to gain motivation and benefit from their trades. Once again, ensure as a trader that you join a community of like-minded traders who can give you insight and support during your trading journey. So the bottom line is that mastering Forex trading psychology is it's as vital as mastering the technical trading aspects. Understanding and managing your emotions leads to rational decisions and boosts your chances of success in trading. Develop a training plan, control emotions, practice discipline and patience, implement risk management, learn from mistakes, and engage with fellow traders. Over time, practice and strong mindset, you will be able to thrive or become a successful Forex trader. Thank you for watching. Let us meet again in our next video. Remember to subscribe.